as I say, their revenue up 8%, normalized earnings up 11% as well, and largely on the back of improved selling prices. What kind of pricing power are you enjoying in South Africa right now?
I must correct you there. It's not on on the back of selling prices. Our selling prices this year went up slightly below inflation, 5%. So what's been coming through in PPC is very significant cost control and operational efficiency. So we showed this morning that our costs went up 3% for the year against the inflationary background. So in fact, what's been happening at PPC is a whole bunch of very, very good and dynamic cost control.
Okay, how exactly are you getting cost controls right, and where exactly are you tightening the belt?
Okay. Running a cement company is not rocket science, but you have to do hundreds of things very well. And we've done many of those things this year, but the two things that stand out, one is logistics. Cement is a logistics intensive business. You have a low value product that you transport long distances. And I've been giving Transnet a hard time over the last couple of years because they've in the past let us down. But I must say that this year Transnet has come through for us. Their efficiencies, their ability to transport our raw materials, our cement is greatly improved. And they helped us improve our logistics, so that was great. And the other side of the coin, or also on operational efficiencies, we have a number of plants across the country. Some are more modern than others. Obviously, it's most cost effective to run the modern plants hardest and at the greatest utilization. And we had a lot of that happening as well this year.
Paul, you talk about doing hundreds of things really well, and it's not rocket science, but on the other hand, doing hundreds of things well, I find it difficult to do one thing well. You say in South Africa, PPC, South African cement sales volumes declined by 1%, mainly due to a subdued final quarter of the financial year, which proved particularly challenging as the transport sector strikes and heavy rains resulted in reduced sales. So those last two things I've mentioned, it doesn't matter how many hundreds of things you do well, they're out of your control, aren't they? And also out of your control, second part of my question, is the imports. I mean, I think the imported segment of the overall is 6%. That 6% makes a difference to you, doesn't it?
It does. Just on your first question, yes, we noticed a severe slowdown in cement demand August and September with the transport strike. Probably took 2% of our earnings in the end, what happened in the last 6 weeks. But came back very strongly in October, November, unfortunately too late for our financial year. And then on imports, yes, they have been rising. We are very concerned about some of the quality and some of the prices of imported products. Some of them are fine, others are not. But it's an area where we believe there's a point to be made on the quality of imports and also on some of the pricing. And you'll be seeing more PPC attention on that front in the future.
In this supply scenario, what demand scenario are you catering to within South Africa's borders?
Okay. South Africa grew until August at about almost 7% in terms of cement demand. So that's where the other part of our profits come from. But in the last quarter probably fell back quite a bit. So on average, we think that South African cement demand for our financial year grew by 4%. Going forward, things are looking pretty subdued for next year. So if things carry on as they are, without big infrastructure projects, we're probably looking at cement demand somewhere between 2% and 4%. But there has been a lot of talk of new infrastructure projects. They've been in the pipeline a long time. It's time they start coming through.
While they do, though, you're having to deal with overcapacity on that supply side. So how are you dealing with that problem? Because one can only assume where you've got overcapacity, that's escalating your fixed costs, regularly.
Yes. So firstly, cost control.
Yeah.
So what you saw in terms of our cost control this year is exactly what you need to do in an you need to be as competitive as possible. But the other part is our marketing strategy, where we've gone out. There are many different classes of cement strength, so we've positioned ourselves as a premium cement company producing premium products, and we demand a premium price for those products. So we get a better sort of revenue coming out of a ton of cement sales than what our competitors are getting at the moment.
Paul, in your commentary, you say PPC is currently pursuing 4 opportunities in other African countries, all of which are at different stages, you say, of development, including final due diligence. Now, previous guest, Nerina Visser from Nedbank Capital, she said, and I wrote it down when she said it, so you can blame her, not me, she says, you've been a relatively late entrant to Africa. Is that fair? And if it is fair, has it been a strategic oversight on your behalf?
Yeah, there's quite a bit of misconception, if I can call it that, about Africa. We are a late entrant. I mean, we're only getting into Africa now, but it's by no means too late. And just to give you some numbers, currently sub-Saharan Africa uses just short of 70 million tonne of cement per annum. That's 5 times what South Africa uses. Going forward, if you take sub-Saharan Africa as a region, they will need another 40 million tonne of cement in the next 5 years. That's 2 South Africas every 5 years. So there's huge opportunity for new cement plants, new cement initiatives in sub-Saharan Africa. There are other players there as well. We're certainly not looking at building all 40 million tonne of what is required. That would be too much too soon for us. But certainly a healthy portion of that, and you have other players with the same sort of strategy as well. But Africa, if you look at the growth rates being projected, what's happening in Africa for the next 10 years, Africa is going to be the pioneering area in terms of cement demand in the world.
Mm-hmm. Take us through your strategy and your investment over in Ethiopia specifically, because you've made a Habesha investment in Ethiopia. So why there, and what opportunity are you seeing there?
Well, Ethiopia is sort of an ideal country for us. It's quite large. It's one of the most populous countries in Africa. I think 80 million people, and people drive cement demand in the end. It has a growing economy. It's well positioned in terms of you're not sitting on a port where you have cheap imports coming in. So all those boxes were ticked. And then we found a project that was launched by 16,000 Ethiopians investing their hard-earned cash into a startup cement company. They needed a technical player, they needed some capital, and we've basically tied up with 16,000 Ethiopian shareholders in this, and with the IDC, in this very exciting new project. It adds probably 5% to PPC as we have it now, and that'll be coming on stream in 2014. But there's also a very strong plan at the moment to actually double what we have. So by 2016-17, that particular investment could be adding another 10% to PPC.
Paul, you talked about your outlook for the next year being sluggish, if I heard you correctly earlier on. It's very difficult for you, I would have thought. Unlike, say, a construction company like Stefanuti, with whom we've just spoken, when they've got an order book of 9.4 billion, whatever it was, you don't get 9 billion or 10 billion rands worth of cement orders ahead of time. Do you then gauge your potential earnings and revenue for the next year by going around to the construction companies and to Transnet and to government and saying what projects are coming on stream and when will they be coming on stream?
Yeah, we do a bit of that, but most of our sales is really, again, thousands of sales on a daily basis. So we look at our sales every morning at 6 o'clock. The sales for the previous day come out, and it's quite predictable. We break the country up into 20 or so regions. Every region is pretty constant. And once you see a region, going up a lot or down, it's usually because of a big project. So it's a combination of keeping track and having a lot of history of what happens in those 20 regions and what's happening with big projects. I must tell you that big projects, although they help, even the biggest project at the moment, probably Kusile or Modupi power stations, only take up about 1% of South African cement demand. So the projects take a lot of cement, but they take it over a relatively long time. So you again need quite a bit of information to put the whole puzzle together. And we've managed to do that over the years.